The Subcommittee on Housing and Insurance will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. This hearing is entitled, "How do we encourage greater flood insurance coverage in America?" Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 5 minutes to give an opening statement. Welcome to the first hearing for the Housing and Insurance Subcommittee for the 118th Congress. I'm confident that this will be a productive subcommittee, and I look forward to working with the ranking member and my colleagues to tackle issues that are affecting Americans across the country. Before we begin, I know the ranking member, Representative Cleaver, could not be with us today as he's currently recovering from a recent surgery. I wish him a safe and speedy recovery, and I look forward to his return. Thank you to Congresswoman Garcia for filling in for him today. Today's hearing is entitled, "How do we encourage greater flood insurance coverage in America?" And we'll highlight one of the most widespread and devastating issues affecting our country. Flooding has been and will continue to be one of the most dangerous vulnerabilities facing millions of Americans in their homes. The National Flood Insurance Program currently covers 4.7 million policyholders worth over $1.3 trillion. Despite this, the program does not capture the entirety of flood risk facing Americans that live outside special flood hazard areas, which is what brings us here today. Statistics show that 20% of all flood claims take place in areas deemed low to moderate risk. So it's important that we explore ways to entice greater coverage in flood-prone areas outside of the government-created flood maps, particularly by expanding the private market where the industry has the ability to underwrite and insure against flood risk. Despite recent growth in the private flood insurance market, which now covers 7% of the entire flood insurance market, regulatory hurdles are one factor impairing the private sector's ability to reach its full capacity. Today's hearing will look to examine where those regulatory hurdles may exist, at least at the federal level. Additionally, we'll also explore barriers that currently exist where consumers fail to appreciate their susceptibility to flood risk with information that they are given. A critical step in strengthening our overall preparedness against devastating floods is raising the public's awareness. If we explore ways to address both of these issues, first, barriers to growing the private market, and second, consumer accessibility to accurate information and improving their awareness along with the ability to correct the record, we will make great strides to alleviate pressure on the federal government and taxpayer dollars in the event flooding does occur. Our witnesses today will provide valuable, holistic insight for us as policymakers to improve on the current system and allow for enhanced protection against floods. Their testimony, collectively taken with the future testimony regarding the National Flood Insurance Program, likely our next hearing, will hopefully provide us with a basis to pursue legislation that leaves us better off than the status quo when it comes to protecting against flood disasters. I thank our witnesses for their testimony today, and I look forward to the conversation. With that, I yield. And the chair now recognizes the ranking member of the Subcommittee on Housing and Insurance, the gentlelady from Texas, Representative Garcia, for 4 minutes for an opening statement.
Thank you, Mr. Chairman, and many thanks to Ranking Member Cleaver for asking me to sit in for him today during this very important hearing. This issue is literally close to home for me, as I represent the Houston area, which is particularly prone to flood disasters. I'm glad we're here today to discuss flood insurance, and I see it as an urgent issue and an opportunity for bipartisanship. The solution here is clear. Congress must pass a bipartisan, long-term reauthorization of the National Flood Insurance Program. Since 2017, the NFIP has been reauthorized on a short-term basis 25 times. It is our responsibility to extend this important program on a long-term basis to guarantee comprehensive and affordable flood insurance for all Americans who need it. Since 2000, there has been at least one flood event in the United States on at least 300 days of the year. And in 2021, all 50 states in the District of Columbia were affected by flooding. And while states along the coastline, like my home state of Texas, are most at risk, data shows that flooding happens almost as often in inland states as in coastal states. In fact, 99% of the U.S. counties are impacted by flooding yearly. This means that no one is safe from a flood event impacting their homes, their business, and their lives. Flooding cost more than $85 billion in damage and economic losses in 2021 alone, and is responsible for 2/3 of the cost from all natural disasters combined. I would like to point out that the natural disasters, and particularly flood events, disproportionately impact low-income Americans and Americans of color. Chairman McHenry has directed each subcommittee to consider diversity and inclusion issues during all of our hearings and to weave them in as our subcommittee on diversity and inclusion was eliminated. As vice chair of that committee, I would like to very much make it clear that flood insurance is not just a financial or industry-related issue, it is an issue of equity, diversity, and inclusion. This context lays out why it is so essential that we work together across the aisle to reauthorize the NFIP on a long-term and comprehensive way. Currently, NFIP is authorized until September of this year. Unless we authorize the program, its authority to provide new flood insurance contracts will end, and its ability to borrow funds for Treasury will all but be erased. Clearly, we cannot let this happen. The impacts will be devastating, and it is far past time that we prioritize the long-term reauthorization rather than kicking the can down the road once again. In addition, we must also work on greater private industry participation in flood insurance to ensure a variety of options and plans for Americans seeking coverage. The name of the game here is affordability, widespread access, and inclusion for all groups in the flood insurance space, particularly as we're only seeing flood events worsen as a result of climate change. I would like to thank our witnesses for being here today, and I look forward to a very productive discussion this morning. Thank you, Mr. Chairman, and I yield back.
Thank you. The gentlelady yields, and I now recognize the gentleman from Missouri, Mr. Lukemeyer, for 1 minute.
Thank you, Mr. Chairman. Just a point of personal privilege for a moment. Today is the last day for my financial services expert, Lucas West, to be with us. Lucas is leaving to go to the private sector. He's been with us for over 9.5 years, and over 5 years as my financial services advisor, expert, confidant, and all those sorts of things. So I always introduce Lucas as the brains of the operation. I'm just the face. He's the guy that probably knows more about it than I do. And so as a result, I always have leaned on him for his expertise and advice. As we all know, our staffs, if the longtime members become almost a part of the family. You know, we spend as much time or more with them as we do our own family sometimes. And so it's a bittersweet day for us from the standpoint of losing a family member. But by the same token, we're excited for this moment because Lucas gets to begin the next step of his career. And with that, we're very happy for him. Look forward to continuing to work with him down the road, and would appreciate you extending our support for him in his next move. Thank you, Mr. Chairman. I'll yield back.
Thank you. The gentleman yields back. And today we welcome the testimony of a great panel of witnesses that hopefully will help us do what the gentlelady from Texas said, is extend this flood insurance program so that we have some clarity in the market, but also do it in a way that addresses the concerns that you will share today. So Mr. Julian Enoizi. Mr. Enoizi is the global head of the public sector practice for Marsh McKinnon's Guy Carpenter Reinsurance Brokerage. Prior to his tenure at Marsh, He was the CEO of Pool Re, the United Kingdom's government-backed terrorism reinsurance mutual for almost a decade, and he has worked at several leading insurance companies throughout Europe. Mr. Christopher Heidrick is the owner and principal of Heidrick and Company Insurance and the Risk Management Services, LLC, testifying on behalf of the Big I. He has a long and successful career in the insurance industry at companies like Prudential and Marsh. His current role at his Florida-based company has him advising clients, colleagues, and local and state organizations about all aspects of the National Flood Insurance Program and private flood insurance. Mr. Patrick Small. Mr. Small is the president of Dual Specialty Flood and executive vice president at Dual North America, testifying on behalf of the Wholesale and Specialty Insurance Association. He has 30 years of experience in the insurance industry and is both resident and non-resident licensed in all states for property and casualty, life and health, and surplus lines. He is a member of the Association Lloyd's Brokers and is the current chairperson of the board. Dr. Carlos Martín. Mr. Martín is both the David M. Rubenstein Fellow at the Brookings Institute and the director of the Remodeling Futures Program at Harvard University's Joint Center for Housing Studies. He earned his PhD in Civil and Environmental Engineering from Stanford University. We thank each of you for taking time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made part of the record. Mr. Enoizi, you are now recognized for 5 minutes to give your oral remarks.
Subcommittee Chairman Davidson and Ranking Member Cleaver, my name is Julian Enoizi, and I'm part of Marsh McLennan, the world's leading professional services firm in the areas of risk, strategy, and people. We're a US company with more than 85,000 colleagues worldwide, advising public and private sector clients in 130 countries. With more than 150 years of experience, we advise individuals, businesses, governments, and communities in analyzing their exposures.
Sorry to interrupt you, sir. Could you pull your mic a little closer? We'll pick it up a little better that way. Thank you.
Is that better? With more than 150 years of experience, we advise individuals, businesses, governments, and communities in analyzing their exposures, implementing solutions, and addressing and mitigating the financial impact of natural disasters through insurance and other disaster risk management tools. Despite being a prevalent natural hazard, flood risk is underestimated, contributing to an underinvestment in resilience, policy decisions that exacerbate the situation, and insurance solutions that are consequently inadequate. Global economic losses from floods have increased a staggering amount, nearly 70% in the 15-year period ending 2021. And we must therefore act collectively, government and industry, to counter this increasing incidence of flooding through enhanced access to flood risk data, which will foster greater investment in flood protection, and smarter land use planning decisions. Moreover, it's a matter of fact that individuals and communities with flood insurance recover better and faster than those without. We believe that there are 5 ways to mitigate the impacts of flood. Strengthening the NFIP. Risk Rating 2.0 will help align premiums with risk, but must not negate or hinder efforts to maintain the pooling principle upon which insurance is founded. Moreover, with more than $20 billion of debt and hundreds of millions of dollars in annual interest payments, the NFIP needs both reform and long-term reauthorization to become the sustainable, world-leading flood insurance program it has the potential to be. Protecting US taxpayers with reinsurance. Reinsurance provides both assurance that the NFIP claims will be paid, as well as private capital to protect the program and ultimately US taxpayers. And thus, when Hurricane Harvey struck in 2017, it triggered a full reinsurance payout, saving taxpayers over $850 million. Growing the private flood insurance market. The administration has proposed reforms that supplement and support the NFIP, whilst also recognizing that private flood insurance has a role to play. The private market should therefore be encouraged and enabled to innovate alongside the NFIP to find ways to further close the flood insurance protection gap. Embracing innovations and new solutions, parametric solutions are a form of risk transfer that can contribute to improving climate resilience. Unlike traditional indemnity-based property insurance, Pricing is simply calculated on the probability that water rises above a certain level. This ensures a welcome and expedited payout to those who have suffered loss. Community-based catastrophe insurance, CBCI, is one such parametric product pioneered by Marsh & McLennan, providing disaster insurance to a local government entity wishing to cover a group of properties. It enhances financial resilience by simultaneously providing affordable coverage and creating incentives for risk reduction. And recently, New York City, with our help, has harnessed CBCI's twin approach to increase the resilience of low and median income households. Finally, risk reduction. The insurance sector has a proud history of incentivizing individual risk reduction actions, but systemic risks require systemic solutions. And today's growing flood exposures must be addressed at the community, regional, and national levels. Congress has taken strong steps to facilitate community-level risk reduction through increased funding and prioritization frameworks such as the Community Disaster Resilience Zone Act, and should continue to equip communities with the capabilities needed to take meaningful action. An example of a program that already reflects these 5 approaches is the UK's flood reinsurance program, Flood Re, a mutual reinsurance company that operates as a not-profit public-private partnership. The program makes affordable flood insurance available to more than 500,000 UK homeowners in high-risk areas. And moreover, it creates a vehicle able to efficiently share UK flood risk with the private reinsurance market and promotes better post-flood reconstruction behaviours as a result. Given the scale and complexity of flood risk, it's my humble submission that the only solution to this problem involves an all-of-society approach to fostering resilience. In this regard, insurance risk transfer has an important role to play in incentivizing hazard mitigation through behavioral change, better building codes, and community resilience planning. I urge the government, therefore, to consider initiatives such as pairing FEMA's building resilient infrastructure with risk transfer solutions such as CBCI to demonstrate the combined value of risk reduction measures when partnered with risk transfer. Indeed, I close by encouraging FEMA to do more in this field and offering our help as it seeks to do so. Thank you for your time today and for the opportunity to present my remarks. I look forward to your questions. Thank you.
Thank you. Mr. Heidrich, you are now recognized for 5 minutes to give your oral remarks.
Good morning, Chairman Davidson, Ranking Member Cleaver, and members of the committee. My name is Chris Heidrick, and I'm pleased to be here today on behalf of the Independent Insurance Agents and Brokers of America, or the Big I. The Big I is the nation's oldest and largest trade association of independent insurance agents, representing more than 25,000 agencies across the country. Many of these agents work with write-your-own companies and private flood carriers. It's from this vantage point that Big I members understand the capabilities and challenges of the market when it comes to insuring against flood risks. I'm the owner of an independent insurance agency located in Sanibel, Florida. I regularly counsel homeowners and small businesses regarding flood insurance. I also hold the designation of Associate in National Flood Insurance. I previously served as chairman of the Big I Flood Insurance Task Force and chairman of the Flood Insurance Producers National Committee, an organization that provides technical assistance and advice on FEMA operations. Sanibel Island was ground zero for Hurricane Ian 5 months ago. The island was completely inundated by 4 to 12 feet of water and was inaccessible by car for 3 weeks after the hurricane. I'd like to thank the NFIP leadership that visited Sanibel in the aftermath of the storm. In general, flood insurers, both NFIP and private, provided our clients with quick response and provided my agency with great support following Ian. When considering flood insurance, people often want to know when the last local flood occurred. I often tell them that more and more often, those events are things that have never occurred before and may even be difficult to imagine. Even on a barrier island in the Gulf of Mexico, some homeowners underestimate their risk of flooding. The last time Sanibel was inundated by a storm surge was 1926, almost 100 years ago. I also grew up along the Jersey Shore. A week before Sandy, no one would have thought that a storm surge would wash away homes that had been there for 100 years. And a week before Hurricane Harvey, no one in Houston would have thought it possible to get 5 feet of rain from one storm. On Sanibel, some people felt safe from flooding because they were in the center of a barrier island that was only between 1 and 2 miles wide. If those people are underestimating their risk of flooding, what should we expect in less risky areas? As you'd guess, agents like myself that serve coastal high-risk flooding areas sell the most flood insurance and are most familiar with the NFIP. However, to make progress with respect to the number of U.S. households insured for the peril of flood, we need to focus on less risky areas. In all areas, it is important to recognize that property owners have limited time and attention to dedicate to the purchase of flood insurance. When someone is buying a home, they're also often changing jobs, selling another home, coordinating a move, applying for a mortgage, enrolling children in a new school, and much more. In perceived low-risk areas, homeowners have often been told by family, friends, and others that flood insurance is not needed before they even come and meet with their insurance agent. There simply isn't enough time for an agent to convince them otherwise. So we need to change the narrative so that all those trusted advisors that are advising home buyers that flood risk is real and that consumers should protect themselves. Purchasing flood insurance can be a daunting and complex process, and in this digital age, there's often a rush to cut corners and under the erroneous notion that an automated process can replace human interaction and expertise. In the case of flood insurance, this could not be farther from the truth. Any kind of proposal that undercuts the valued and trusted role that insurance agents and brokers play in this process could have a negative impact on the goal of increasing flood insurance participation rates. Additionally, agents play a critical role in retaining flood policies and preventing a decrease in participation rates. When a policyholder pays off a mortgage or is no longer required to carry flood insurance due to a map change, agents are the people that speak with those homeowners and recommend that they retain their coverage. To achieve the goal of increasing the number of households insured for the peril of flood, policy retention is just as important as writing new policies. And what Congress can do in the short term to move the needle? You can make modest policy changes that could help grow the market and protect consumers. For example, the Big I supports H.R. 900, which was recently introduced by Representatives Luetkemeyer and Castor. The bill would amend the National Flood Insurance Act of 1968 to clarify that private flood insurance can satisfy NFIP continuous coverage requirements. The Big I also supports allowing refunds for unearned premiums for the midterm cancellation of NFIP policies if a consumer elects to purchase a policy from the private flood insurance market. Thank you again for your time today, and I look forward to any questions that you have.
Thank you. Mr. Small, you are now recognized for 5 minutes for your oral remarks.
Good morning, Chairman, Ranking Member, and members of the Subcommittee. My name is Patrick Small, and I'm the President of Dual Specialty Flood. My firm is a member of the Wholesale and Specialty Insurance Association, and we thank you for inviting me here today to testify about my perspective and experience as a professional in the private flood insurance market. Dual operates as a managing general underwriter, as a leading program administrator in the U.S., offering specialized financial lines, property, and casualty insurance products. We place coverage in all 50 states on a surplus lines basis, working directly with retail agents and brokers, wholesale brokers, and insurance carriers. In 2022, Dual placed $1.5 billion in gross written premium amongst all of our product lines, with over 30 carrier partners and 30-plus underwriting programs across 7 operating subsidiaries. Dual's Specialty Flood Division focuses both on private primary and excess flood for both commercial and residential consumers and places $65 million in annual premium, or about 5% of Dual's annual premium production. I joined Dual in 2014. That was around the same time that the private flood market began to develop as a result of the 2012 reforms supporting the direct engagement of the private market. Since then, we have steadily grown our product lines as well as market partnerships. And generally speaking, consumers whose risk that exceed or do not fit within the terms and limits of the NFIP, or whose risk are declined by the standard market, will have agents and brokers look to our markets for solutions. The partnerships between the consumer's agent and a wholesale partner is critical, and I'm pleased to be testifying with 2 firms that I regularly work with in this capacity. My written testimony includes additional facts and figures about the size of the surplus lines flood insurance market and its growth since 2011. To touch on this briefly, I'll reference numbers available from California, Florida, Texas, and New York, as they have been collecting and reporting this data since at least 2011. While not a full picture, these 4 states collectively account for nearly 50% of the U.S. surplus lines insurance market. In these 4 states, surplus lines flood insurance premium has grown from $119 million in 2011 to $437 million in 2022, or an average of 14% per year. The number of policies written in these states during this time has actually increased even faster. In 2011, there were only 11,650 surplus lines flood policies written in these 4 states, but in 2022, we have over 204,000 policies written with an average increase of 33% per year. There's no definitive source of information about the size of the private flood insurance market, but our limited sources clearly show that the private market is still very much in its infancy, dwarfed by the 4.7 million flood insurance policies written by the NFIP. The private market will continue to expand with the general push towards rate adequacy and sustainability, which the NFIP is clearly helping to lead the way. We have seen this steadily increase as a result of the clarifications made by federal banking agencies, as well as state actions to modernize the regulatory environment, especially in our surplus lines market. I see steps in the right direction with the impact of Risk Rating 2.0, the emphasis that the NFIP is now putting on inland modeling, as well as the proper valuation of a property, are key components to underwriting accuracy and rate development for any type of property program. As to what the federal government can do to help continue this trend, we did note a few legislative proposals that we support in our testimony. Two of those measures are continuous coverage provision to allow a consumer to move freely between the NFIP and the private market, and further allowing the NFIP to return unearned premium for midterm cancellations. But we also, throughout this whole process, we must also provide a continuum of education to our consumer base. And the consumer base includes both the agents and their clients. And really, it's the emphasis to highlight or alert the insured to real versus perceived exposures to flooding. An insurance buyer must understand their risk and have a general idea for the potential for protective coverage to lead to better take-up. Again, thank you for having me. We look forward to working with you and your staff to increase flood coverage across the nation. Thank you very much.
Thank you, Mr. Small. Mr. Martín, you are now recognized for 5 minutes to give your oral remarks.
Thank you. Good morning, Chairman Davidson, Representative Garcia, and members of the subcommittee. Thank you for the opportunity to present research on the challenges that households face with increasing and increasingly costly floods. NFIP has faced numerous hurdles since its creation in 1968, not the least of which was the increasingly poor mismatch between its policy rates and actuarial risks. The passage of congressional reform a decade ago, along with FEMA's consequent Risk Rating 2.0 efforts, have improved the program's ability to reflect flood risk more accurately, but they have also foregrounded the affordability and access concerns that we are discussing today. I identify 6 themes from the literature relevant to the widespread adoption of flood insurance. The unaffordability of flood insurance is the first and most salient barrier to broader take-up. The creation of a well-designed, means-tested assistance program for low-income property owners with high-risk properties could more efficiently help households burdened by NFIP rate increases and effectively expand the marketplace for any provider at the same time. Second, most consumers have limited awareness of their actual flood risks and may not see the need to purchase flood insurance if it is not required. Highly vulnerable groups, such as renters, have little to no information or support for their housing decisions. Better property disclosures and user-friendly information channels would help households make those informed decisions. Third, federal institutions that require flood insurance may not have clear, consistent, and enforced requirements, especially for the future flood risks that are material to homeowners' exposures, but not integrated into the terms of a 30-year mortgage today. Updates to reporting and fiduciary regulations of consumer financial products for which flood risk is irrelevant could lead to immediate flood insurance take-up and a better integration of consumers' financial tools. Fourth, consumers are often in the dark about their own individual coverage. Understandable and uniform coverage, premium, and treatment information, including clear language about all policies for a property as part of a national insured's Bill of Rights, could increase homeowners' awareness of coverage gaps and lead them to purchase more and better flood policies. Fifth, we could simply reduce the risk that makes flood insurance so expensive. We have massively underfunded mitigation at both the property and infrastructure levels, including thoughtful buyouts for repetitive loss properties. More resources to federal mitigation programs, particularly for vulnerable communities, would make offering flood insurance a sounder proposition for all carriers. Finally, the lack of transparent data on properties, property owners, and their respective insurance policies prohibits a sound assessment that can inform critical policy questions, such as the one posed in this hearing's title. Open data are necessary to measure disparities between policyholders by price, coverage, and treatment, which is evidence needed to ensure that federal decisions lead to fair, efficient, and effective outcomes. Centralized national reporting requirements akin to mortgage disclosure data would support monitoring, evaluation, and corollary research. Along with these broad categories of opportunity to grow flood insurance markets lies the expansion of the marketplace of providers. Fortunately, the 6 categories I have mentioned benefit any type of flood insurance carrier. However, we know too little about how the principles of fairness, efficiency, and effectiveness would play out under that scenario. Historically, poor reporting of private insurance data, highly variable across the overseeing state governments, prevents evidence gathering with respect to one provider's ability to expand the consumer pool for flood insurance over another, such as the currently dominant NFIP option. We know that one benefit of NFIP has been a closer alignment to mitigation efforts and the broader federal disaster risk management framework. Efforts to increase private flood insurance should not only consider its effectiveness in reducing the costs of federal operations, but also the costs that the federal government incurs of post-flood relief and recovery when insurance claims payouts are insufficient, and of pre-flood mitigation infrastructure that incentivizes private insurers to provide policies in the first place. Of course, Congress should view the fair distribution of costs and benefits across all policyholders as being the primary criterion for moving forward. We are living in a moment when the unwritten contract between insurers and government is being extensively rewritten. Over 100 years ago, private insurers stopped issuing fire policies because of the Great Urban Fires. In the 1920s, private insurers stopped issuing flood policies after the Great Mississippi Floods. This led to the eventual creation of the NFIP. Expanding flood insurance to more households whose properties and communities are vulnerable is a laudable and necessary goal, but we should tread carefully, lest we find ourselves in a position similar to 1968. Thank you very much.
Thank you, Mr. Martín. We'll now turn to member questions. The chair now recognizes himself for 5 minutes of questions. Because it is a government entity, the National Flood Insurance Program needs legal authorization from Congress in order to sell its insurance. Unfortunately, that authority has been caught up in our broken appropriations process since the last long-term NFIP bill expired in 2017. Given the very real possibility that we might face a government shutdown come October, and with it a lapse of the National Flood Insurance Program, I've introduced H.R. 1392, the National Flood Insurance Program Extension Act of 2023, which would reauthorize the program through December of 2024, giving this committee the time and deadline freedom it needs to do a deep dive on flood insurance reforms. Does anyone on the panel think that giving the NFIP nearly 2 years of stability would be a bad thing? Do each of you support H.R. 1392 over this endless cycle of short-term reauthorizations, punting the ball down the road, and brinksmanship on looming deadlines? Is this a bad thing to extend it and provide 2 years of certainty?
Mr. Chairman, I would say absolutely not. I would say we would support anything relating to stability and long-term extension. In my previous role, I ran an entity similar to the NFIP, albeit in terrorism, and we had 5 yearly reviews, which gave a period of stability and an ability to look at modernization of the program in order that it could keep pace with changes in all sorts of environments, and I found that very valuable.
Yeah, thank you for the clarity on that. And I hope we can find consensus, but anyone else?
Mr. Chairman, the Big I agrees that job one is to not allow the National Flood Insurance Program to lapse. Beyond that, the Big I does support a long-term reauthorization of the National Flood Insurance Program, and we'd be happy to work with you and your staff on working out the details.
Yeah, I think we'll just go down the line if you.
Yeah, I think we would concur. The Wholesale and Specialty Insurance Association would also support that. Even being in the private market, one sustains the other. Being the NFIP sustains the private market, and vice versa. I think there's a great opportunity, so extension would be in our favor.
Thank you. Mr. Martín?
Yes, program stability is absolutely critical. I would encourage the subcommittee to consider reauthorization for even longer, as much as is possible.
Yep, thank you. So as everyone knows, the National Flood Insurance Program is by far the largest provider of flood insurance, roughly 93% of all residential flood insurance coverage. So while private insurance makes up the rest, it is also nothing like public-private partnership for risk sharing that we've seen in markets like mortgage insurance, where 2021 government FHA, VA share is around 55% of the private mortgage insurance market, and PMI is about 45%. That market tends to work well in delivering both ample consumer choices and a government baseline option. Mr. Small, is there any reason why we could not aim to replicate that sort of model for flood insurance going forward, where NFIP plays a big but not dominant role, while the private capital takes on more risk and supplies new options? What steps would we need to take in order to move us closer or down that direction so that we could have a more stable mortgage insurance market model than the all-or-nothing model we basically have.
Yeah, no, I like that, thank you for the question, and I like that observation. I think the PMI model where you entertain it, the initiation of purchasing a flood policy at point of, loan origination is excellent. We've done a lot of work with lenders looking at loan origination and through the life cycle of a servicing a loan in terms of placing flood and maintaining flood insurance, both with the NFIP and the private market. I think the unique opportunity is with the NFIP is if you've got a nationally promulgated product, you've got write your own carriers and plenty of them, and or going direct to the NFIP, there's a real opportunity to tighten our relationship with lenders throughout the nation, whether the vehicle is PMI and or just introducing flood insurance at point of loan origination is highly critical and very important.
Yep, thank you. And Mr. Heidrich, briefly, apologize for cutting you a little short on my time. Maybe a quick suggestion that would help agents.
Thank you, Mr. Chairman. Education is the most important priority, not just for consumers, but for their trusted advisors as well. We as a society need to recognize the risk of flooding in both lower risk areas just as well as higher risk areas. In addition to consumer education, affordability is a critical factor because people cannot buy a product that they can't afford to have even if they do recognize the risk.
Thank you. The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the witnesses for appearing with us this morning. As I mentioned in my opening statement, I represent the Houston area, which is particularly prone to flooding. We all witnessed the disaster of Hurricane Harvey in 2017 that left much of my district underwater. And while luckily we have not had a flood event ever since then, the flooding has not stopped, and the potential for disaster is always, always looming. In fact, any rain event makes us go for cover and get ready. And to make matters worse, fewer households in Houston have flood insurance now than when Harvey hit, largely due to the lack of affordability. Mr. Martin, you wrote in your testimony about take-up, highlighting that Congress must ensure that more Americans are opting to have flood insurance coverage. How can we do that? What provisions should be in the reauthorization that would make sure more individuals and families take advantage of the program? And what role might private insurance play in this?
So certainly private insurance is playing a much larger role and will likely continue to play a larger role as the legislative reforms from a decade ago, as well as risk rating 2.0 implementation continues. I would certainly recommend that subcommittee look at a wide range of options, many of which all of the panelists agree to with regard to information, provision, data sharing, et cetera, so we can monitor these effects. But ultimately, means-tested assistance program for low-income households in high-risk areas that will need to be able to have additional resources to be able to afford their insurance policies is critical.
Okay, thank you. I would like to turn now to the NFIP's Risk Rating 2.0 system. I think one of the witnesses alluded to it, designed to distribute coverage rates more equitably and accurately. This effort, while important, does mean that some individuals would face increased rates. Mr. Martin, as we consider policy related to the NFIP, how can we balance affordability with accurate risk assessment, especially as risk for flood events continues to rise?
This is the challenge that not only this committee has faced, but that has been the subject of conversation since the legislative reforms from a decade ago. The ability for NFIP to be more actuarially, to match its rates with actual actuarial risk is allowing many more private insurers and carriers to be able to provide services in this area. That doesn't mean that low-income households who can't afford their affordability will automatically suddenly be able to afford it. There is likelihood that more competition will be helpful and could provide reduced premium rates based on the levels of analytical data tools that private insurers could bring to the table. But this will continuously be a challenge and one that we need to monitor. I just recommend that we still consider about the use of data and the availability of data to be able to understand who is excluded and who is included in policy holding.
Okay, thank you. And as you likely know, about 25% of damage of homes from flooding happens outside of high-risk flood zones. and households are only required to have flood insurance if they are located within the high-risk zones. How can we address, Mr. Martin, this problem? Do high-risk zones need to be updated, and if so, how often? I know that's a big issue in our area, the establishment of the floodplain maps, the flood zones.
That's exactly right. The dynamic nature of hydrological and climatological conditions, particularly due to better information about climate change's effects on sea level rise and more extreme flooding events. And a lot of these conditions requires a constant monitoring and constant updating. One could argue that the more frequent that is updated for NFIP, that information is updated for NFIP, the better. So certainly more resources to making sure that we have the best scientific information to be able to make those changes is helpful.
Right. I know one of the other witnesses mentioned it, but where's the play between, fully addressing this and establishing the zones, but then the educational process involved in making sure homeowners know what the potential risks are and what the liability is? I know in my area, language then also becomes a barrier. A lot of this plans, a lot of the outreach is only in English, it's not in Spanish, it's not in the Vietnamese pockets that I have. And of course, the Houston area also has a lot of Chinese Americans. So, what can we do more in terms of educational outreach for people to know the potential risks? Oh, he had 2 seconds, sir.
Yeah, please.
Mr. Martin. Oh, I'm sorry.
I didn't know if you wanted another witness to respond. We can certainly do things where people are making decisions about property and about housing, that's like property disclosures, and that should be included for renters as well. Unfortunately, we have very variable property disclosure information across the states, which is a state dictated policy, but we do have national policy regarding certain things like lead-based paint. Which includes for renters. And so there are opportunities to think about disclosure opportunities when people are making those housing decisions to think about their flood risk as well.
Okay, thank you. Thank you, Mr. Chairman.
Thank you. The gentleman from Florida, Mr. Posey, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Heidrich, some people have suggested flood insurance premiums should be further adjusted to account for projected climate change. Why should flood insurance premiums be based on? Why should flood insurance premiums be based on anything other than the flood risk for the current insurable year?
I'm sorry, Congressman, I didn't hear the beginning part of that question. What I heard is why should premiums be based on something other than risk? Is there something more to that?
Yeah, some are proposing that flood insurance premiums should be further adjusted to take climate change into consideration. And the question is, why should anything more than the risk for the current year be the subject of it?
Got it. Thank you for that question. Question's probably better answered by an insurance company that actually prices risk as opposed to an insurance agent. I'm not certain exactly how those rates are calculated.
Okay. Mr. Small, we are going to commit to actuarial flood insurance premiums and premium subsidies for low to moderate income homeowners, and we know which homes are subject to mandatory insurance. What are the reasons to have federal government selling flood insurance instead of merely turning this business over to the private sector and state insurance regulators? Could the private sector handle this need?
I think when we look at risk selection, regardless of moderate or special flood hazard areas, we kind of look at it the same. We look at the risk, we develop rates for sustainability and accuracy in terms of being actuarially sound. So there's a component there to getting the insurance component correct in order to have a sustainable business and be able to fund claims when they come in. So we don't really differentiate between a BC or X or a moderate risk zone over an A or V zone. We look at the risk, we look at the geography and the components that go into that, develop a rate, and then determine if that's a business that we can sustain and be in. I'm not sure if that addresses your question, but that's kind of how rate development works when we look at the flood business.
Yeah, that's good insight into it. We know that there are many properties that have had numerous claims in the past. We've heard reports of multiple total loss payments for property. do you think it's wise or in the public interest to continue covering risks that are almost for sure going to occur? I mean, look, Congressman Lukemeyer said one time, if a guy has a crash every single year, sooner or later the insurance companies won't cover him. Do you think it's wise that we continue to cover these total loss properties year after year? Anybody?
Well, that's a kind of a difficult question. So I think in the private market, yeah, that would be a real challenge for us to make sure that we, had sustainability in that particular insured. In many insurances, when you have claims or repetitive claims, there becomes an issue, and you have to look for other markets and/or mitigate in your reconstruction of your loss in order to become insurable. Obviously, NFIP has a social element of responsibility to help Americans maintain their homes in situations of catastrophe. So it's a delicate balance. It's for sure. But you've hit on something that will be a challenge for the private market, probably a challenge for NFIP as well as we think about the long-term sustainability.
Thank you. Mr. Enoizi, in September, after hurricanes in Florida, Fortune Business News reported that the FEMA director said the agency's flood maps are useless. The maps don't accurately tell the people they were in the floodplain in Kentucky or Florida. The Washington Post had a similar story in early December and last year. Of the alleged culprit is, of course, climate change. Can we expect to get more people signed up for flood insurance, or can we even have a reliable insurance program or accurate premiums if the maps are inadequate, as FEMA is claiming? Will insurance ever be able to meet the needs of people in harm's way if FEMA can't produce accurate maps?
Thank you, Congressman. I think in terms of flood mapping, technology is evolving all the time, and certainly satellite technology enables us to do much more in terms of flood mapping. And in my remarks, I talked about encouraging and enabling FEMA to do more in terms of its flood mapping. So I think that is something that should absolutely be encouraged.
Thank you. I see my time has expired, Mr. Chairman. I yield back.
The gentleman yields. The gentlewoman from California, Ms. Waters, who is also the ranking member of the full committee, is now recognized for 5 minutes.
Thank you very much. I'm going to direct my question to Dr. Martín. Dr. Martín, historically, private insurers have receded from communities after they were hit hard by catastrophe flooding. For example, we've heard from homeowners in Houston whose coverage following Hurricane Harvey was dropped by their private insurers. We even heard about people who reapplied for the private coverage but were shocked to receive notification that they were denied coverage. Can you discuss how this affects equitable access to flood insurance? What does this say about the role of the NFIP?
Great. Thank you for that question, Representative Waters. And we certainly hear stories in the general press as well as researcher anecdotes around like the Houston family whose policies are lost either immediately after an event or even many times before. And I can't speculate about the specific reasons for that single family, but certainly when their policy being dropped or denied. But we certainly look to see what we'd like to see more of what these patterns are in different cases. Studies suggest that much of the, for example, discriminatory practices that relate to price and coverage have been eliminated significantly and diminished, but insurers can still base rates on credit score, credit-based insurance scores. And as I understand, about 85% of home insurers use credit-based insurance scores in states where it's allowed. So there's a concern whether there are differences and disparities in who gets dropped and under what conditions. Certainly if it has to do with the actuarial risk, then one would argue that NFIP plays a valuable role because one, it is a guaranteed policy, two, it conforms to national consumer protection rules, and three, there will always be a need for a program like NFIP that can distribute risks more evenly to include more policyholders.
So, Dr. Martín, a 2022 study found that worsening climate change has more than tripled the risk of a $1 trillion mega flood in my own state of California compared to a century ago. Indeed, earlier this year, We experienced some of the worst flooding in the state's history, totaling between 5 and 7 billion in damages in parts of Los Angeles County. We have not only saw life-threatening flooding that took down trees and inundated cars, but we also have seen significant snowfall that has led to destructive floods. These damages can be especially devastating in a state where 98% of the Californians lack flood risk coverage. For those who do have flood insurance, NFIP accounts for 84% of all policies currently enforced in the state, offering a critical lifeline to thousands of families. With the threat of more frequent and severe flooding, this could mean that NFIP may take on additional debt in the future, but the program is already saddled with a legacy debt from Hurricanes Katrina and Sandy. Interestingly, Republicans were very supportive of forgiving part of the NFIP debt when they were in charge, and I see no reason that new policyholders should have to pay for the legacy debt from floods from nearly 20 years ago. Do you agree that Congress should finally and fully forgive this legacy debt? How would forgiving the debt support the affordability of the NFIP?
Yes, I would agree with that. There's no reason for that debt to be held over the head of the program. It doesn't benefit future policyholders, doesn't benefit current policyholders, and certainly doesn't benefit the long-term fiduciary stability of the program. Ensuring that with the reforms that have occurred in the last 10 years, both by the program and through legislated through Congress, I believe that much of the concerns in longer-term fiduciary standing are going to be more, have been resolved, and so there's a lot more stability in the program.
Well, I agree, and I have legislation that would forgive the legacy debt. Thank you very much, and I yield back the balance of my time.
The gentlelady yields. The gentleman from Missouri, Mr. Lukemeyer, who's also the chair of the Subcommittee on National Security, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and congratulations on your new role. Look forward to your leadership here in the 118th Congress. Thank you for holding this hearing today. I think it's vitally important that we get some information to our colleagues on flood insurance. There's a lot of us on the committee that there's only 2 or 3 of us actually that actually have some background on this. Everybody else is new to the committee since we actually discussed this thoroughly several years ago. So it's a great topic to be starting off the Congress with. Mr. Heidrich, you indicated you supported my bill that would allow people to sort of dip their toe in the private insurance market and then be able to go back to NFIP. Why do you think that bill's important?
Thank you for your question, Congressman, and thank you for your work on that bill, as it is very important. Obviously, the Big I supports it. The bill clarifies for the consumer, that the consumer can leave the NFIP and come back to the NFIP. And to be specific in an answer, I have a real example. I have a client that was paying $800 a year for their flood insurance premium. House was sold to the next buyer who was able to keep up that premium. They take advantage of something called the glide path, which exists currently in risk rating 2.0, that moves people from the less expensive premium that they had under the old rating system to their full risk rate. But the full risk rate on this particular property is $8,000. So the statute limits the amount that premium can increase each year. It protects the value of the home. It's an asset for the next buyer in case that person has to sell their property, and of course keeps the cost of flood insurance affordable. But as that premium increases over time, there may be private flood insurance options that are actually more attractive to that consumer, whether because it's less expensive or there may be better coverage. But under the threat that that person may have to return to the NFIP at some future time and immediately be subject to that full risk rate, that consumer, as an agent, I can't recommend to that consumer that they leave for this less expensive solution because they're giving up the ability to take advantage of that glide path over time. Unforeseen circumstances could lead that person back to the NFIP at a much higher premium.
Thank you very much for that. Flood insurance is a really big issue to me on a personal basis from the standpoint of my district. I've got over 2/3 of the Missouri River. It goes across my state. I've got a number of miles of Mississippi, and then I've got 1,150 miles of shoreline around the Lake of the Ozarks, which is the #1 recreational lake in the country, which is actually more miles of shoreline in the state of California, to give you an idea how big my flood insurance problem is. Even though I'm an inland state, it is a really big deal. So from that standpoint, Mr. Enoizi, Does the private insurance market have the ability to take on more flood risk?
Yes, I believe it does. But it requires, if you look at premium is calculated on two factors, frequency and severity. Both of those have been increasing in previous years, and so many of the questions that have already been asked in terms of better flood mapping, but also combining this. That if you actually look at the numbers that we're talking about, there is never going to be enough premium dollars in the insurance system to pay for all of the losses that you're talking about. And so we have to find ways to marry risk financing with risk mitigation. And buying on a community basis can achieve that because otherwise you're going to always be trying to sell onesies and twosies as opposed to selling to vulnerable communities.
One of the things that we've talked about in some of the early statements that were made is the fact that and some of all of you made, is the fact that the program is not sustainable from the standpoint of the revenue it generates. You know, we continue to have losses. They wrote off $16 billion in 2017, and we're currently $20 billion in debt. So technically, it's a subsidy program for people who want to live along water to be able to take advantage of the view or whatever. My view is that this program needs to be revenue neutral. I don't see why we have to continue to subsidize it. So I'm a big believer in the secondary market. I know, Mr. Annoysy, your company does a lot of secondary market work. I would assume that you'd support that. Years ago, when I was chairman of this committee, we did a lot of discussions with the secondary market individuals and said there's plenty of capacity in the secondary market to take up this additional risk, which would hopefully drive the premiums down. Do you think this would help drive premiums down if we could pass off some of this other risk to the secondary market?
Yes, absolutely. Pricing needs to be more risk reflective, and that's why I applauded 2.0 in my remarks. That is how you will bring the private market back, is via risk-reflective pricing, but also innovative solutions. I mentioned parametric, which is rather than indemnity-based, is more about just simply a trigger where a water level rises. It's these kind of innovations that are going to allow the private market to take the burden off the taxpayer.
I know we did a quick sort of back-of-envelope analysis of the losses over the 20 years previous, back in 2016, 2017. If we would have had a secondary market available to us and participated in it with about $1 billion deductible on it, we would never have had a single loss. It will work if we just participate in it. Thank you very much for your testimony, Mr. Chairman. I yield back.
Gentleman yields. Members are advised that one vote has been called on the floor, and the chair will continue the hearing. While I may step out, someone will always stay in the chair, and members will filter out, take their vote, and come back in. We'll work the queue as we would otherwise. The gentlewoman from New York, Ms. Velasquez, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Heidrich, following Superstorm Sandy, policyholders across New York and New Jersey voiced complaints about the coverage they thought they had versus the coverage they actually had. In response, my bill, the NFIP Administrative Reform Act, which passed this committee in the 115 and the 116 Congresses with unanimous bipartisan support, creates a disclosure and an acknowledgement to accompany the purchase of standard flood insurance policy. In your experience, how will these documents provide policyholders with a better understanding of what is and what is not covered under their flood policy?
Thank you for your question, Congresswoman. It's our job as agents every day to provide clients with as much information as we possible to help them to make an informed decision that is best for their personal circumstances. And any tool, whether it's a document or anything else, would be something that would probably help to achieve that objective.
Thank you. Mr. Martín, New York City is comprised of a diverse housing stock, especially for renters. While many multifamily buildings are owned by corporate firms, many owners are small mom and pops that operate on a very thin margin, especially when they are providing affordable housing. These properties are often our most vulnerable to flooding events and lead to displacement after a storm. What more can Congress and FEMA do to improve pre-disaster mitigation for rental and affordable housing properties and the renters.
So certainly particularly looking at the kinds of information that some of those property owners, particularly the small property owners, have access to is absolutely critical. And that includes some of the conversations that we're having here about very clear disclosures about what is in and what is outside of your policy and how it covers across all your policies. One could think about other alternatives for NFIP with regard to the coverage limits for certain kinds of properties, particularly those that may be occupied but maybe owned by small low-income households and occupied by low-income households. So I encourage you all to explore many of these kinds of options, yes.
Thank you. Mr. Heidrich, despite the frequency and severity of flooding in the U.S., households' purchases of flood insurance have not kept pace. Additionally, many households also incorrectly believe that flood insurance is covered under their homeowner's policy or their home is not at risk. These statistics are even higher for households of color or where English is not the primary language. What recommendations do you have, and how is the Big I working to increase flood insurance coverage among ESL and households of color?
Thank you again for your question, Congresswoman. The National Flood Insurance Program partnership with independent insurance agencies is critical to increasing the coverage amongst ESL and households of and businesses of color. The Big I insurance agents are across the country in virtually every community in every state. Our members make up a cross-section of the communities that they represent. So the Big I also has a diversity council that has worked to improve diversity throughout the ranks of the entire independent insurance agency system, and we promote minority-owned insurance agencies. In terms of a recommendation, I would go back to the statement that I made before on education. And it's not just education of the consumer, it's education of all those trusted advisors around the consumer, so we as a society ubiquitously recognize the risk of flooding.
Thank you. Mr. Annoysy, to attempt to make flood insurance coverage more widely available and affordable for homeowners, I have previously introduced the Flood Insurance Tax Credit Act, which will create a new tax credit for flood insurance expenses based on a taxpayer's use of NFIP's WYO or direct program. Do you think a tax credit program like this could help ease premiums payment for consumers and help incentivize them to get coverage?
Congresswoman, thank you for the question. In answer to your question, I would say anything that encourages the take-up of flood insurance would be welcomed by my company.
Mr. Martín, what is your view?
I would certainly agree. Any opportunity to help expand the pool of policyholders' purchases.
Thank you. I yield back.
The gentlelady yields. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized for 5 minutes.
Thank you, Mr. Chair. In late July 2022, FEMA released a concerning draft proposal called Direct to Customer. In its release, FEMA noted that it is imperative that FEMA enable the digital sale and servicing of flood insurance to increase the number of people covered. FEMA noted that this is a long-term project and stressed that they are in early stages of looking at the concept and just beginning to ask questions about it. Despite the need for more flood insurance awareness, insurance agents and brokers, whether selling to NFIP or via a private insurer, play an important role in informing the consumer's purchase decisions. In this digital age, there's often a rush to cut corners under the erroneous notion that an automated process can replace human interaction and expertise. Any kind of proposal that undercuts the valuable and trusted role that independent insurance agents and brokers play in this process could have a negative impact on increasing flood insurance participation rates. We saw this actually play out in the EIDL loans offered directly by the Small Business Administration during the pandemic. I was a member of the Small Business Committee in the 117th Congress. We had a much higher incident of fraud related to the PPP loans issued through the SBA than we did through the financial institutions, that did the underwriting on them. So to Mr. Heidrich, do you think the direct-to-customer approach to distributing flood insurance would reach consumers that the NFIP or agents are not currently reaching?
Thank you for your question, Congressman, and no, I do not. Since I entered the insurance industry over 30 years ago, direct-to-consumer approaches have been tried over and over again, and most have failed. In fact, over this time, the market share of independent insurance agents has remained stable or it's grown. And we've talked about education earlier, and if we agree that education is essential to increasing the number of U.S. households insured for the peril of flood, then it's even more important that independent agents who live in and have local knowledge in local communities remain in the process so they can refer to the local creek, the local lake, the pond, the levee nearby, the hill that are specific to flood risk in a particular area. And agents also play a critical role in servicing those policies after they're written. When mortgages are paid off, retaining those policies is just as important as writing new ones. We don't believe that a call center representative or a website would be effective in conveying this information. And one other point that I would add is some of the communities that we talked about earlier that are disadvantaged may not have the same access to computers and internet that other communities have. So there again, the role of the independent agent, a face-to-face relationship would be more important in increasing the take-up rate on flood insurance.
I mean, it seems from the conversations that have been happening that the biggest obstacle is to more private flood insurance is the subsidies in the NFIP. And the subsidies have contributed to over $20 billion in debt to the NFIP as well. And unfortunately, I think that's what's putting a lot of these properties in harm's way. Mr. Small, many of these plans are currently being phased out by FEMA, but how can Congress address the subsidies and bring more private plans into the market to protect taxpayers?
Well, I certainly think there's room for improvement in new private market to come into the market. Obviously, it's a delicate balance trying to, again, get the insurance component right and then figuring out the subsidy maybe to pay the premium, but you've got to get the premium correct if you want a sustainable program. And maybe, you know, we've been on a 50-year journey on the NFIP. In the last couple of years, some really great tools have been introduced. And I think we're still in the infancy in the private market to figure out what that's going to look like over time, but it looks very promising to me to have that. So I think we need to, take this forward, certainly make sure we've got our extensions in place, continue the good work that Risk Rating 2.0 has provided, and build upon that. So I think we're still early. I wouldn't say it's a reset. It's just taken us a while to get here, and here we are. But definitely out of the 4.7 million policyholders, there's that's not even the tip of the iceberg.
Last month, reports indicated that NFIP's traditional reinsurance placement faced a 36% decline in participants from the previous year. Mr. Enoizi, what can Congress do to encourage more participation and further protect the taxpayers? I know you have had this question multiple times today. So,
Congressman, thank you. I think the reduction that you refer to is simply a function of the market. All areas of insurance suffered that kind of retrenchment. In terms of encouraging greater take-up, I think we've touched on a lot of those things. One thing that perhaps hasn't been mentioned is the idea that...
The gentleman's time has expired. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you all so much for being here. I am from the city of Detroit, and you may not think that this issue applies. Folks always think about the coastal community, but in the Great Lakes, we have seen, especially in Michigan, in the last probably 5 to 6 years, really, well, since 2014, just drastic damage from flooding in our communities. I always like to bring my district into committee hearings. I can tell you there's a woman in Inkster who had her whole basement flooded in her 70s, couldn't go down there, didn't go down there, ended up freezing over. And then she ended up having mold and so much more because she couldn't afford insurance. Not only that, she couldn't access FEMA dollars because of the way the process is, that you have to go there, provide all this documentation. Again, didn't have the resources, the capacity to get all that in, to take those photos, didn't even, I think she still had like a old phone, all of these things. So, you know, when I read Michigan's flood insurance, I think the average is about $1,047. It's about $300 more than the national average. And then on top of that, we have some of the highest auto insurance in the nation in Michigan. It's layers after layers for many of my constituents. FEMA estimates, I think, that even if you have an inch of rain or water can cost $25,000 in damage. And so, of course, this program is important, but it's not accessible or affordable to my residents. And I don't know how we change that, because I feel like we primarily focus, to be honest, the accessibility of those that own the $1 million homes on the coast, those that are in, you know, parts in Florida and other areas, while the senior citizen who worked all her whole life is watching, again, everything she put in this home just disappear day by day. When you have an insurance product that is so risky and unstable that the government must step in, you don't have a free market product, do we, Mr. Martín?
To the extent that NFIP has been reformed, it's competitive with private insurers.
Well, I mean, what we have to me is a product that forces teachers, nurses, retirees, and residents across my district to pay for multi-million-dollar insurance policies so that the wealthiest Americans can afford to rebuild their mansions after the latest major natural disaster. That's how my residents see it.
So I certainly, what you're referring to is the clear reason for why NFIP is still needed. We have to have policy coverage for people who otherwise who don't have the resources. The challenge is now, with the changes that have occurred, we do have an affordability problem. So an assistance program for particularly low-income people is absolutely critical. I would say that what the condition for the household that you're describing speaks to the importance of mitigation and insurance availability beforehand, so that people don't have to go through the suffering that these events incur. So I certainly encourage you all to think about all the range of mitigation tools and preparedness tools that should be provided and resourced for particularly low-income, vulnerable communities.
Mr. Small, you had something to say?
Not necessarily. I mean, we look at all types of risk, whether it's the larger, more highly valued structure, to the structure that you've described in your question. And so, yeah, it's a delicate balance. I agree that mitigation is key. And again, there definitely.
I mean, we're covering 93%.
There's a
93% of flood insurance is covered by NFIP. Is that correct?
I'm sorry, I'd say that's.
NFIP, like 93% of flood insurance is covered under that program.
That is correct.
Yeah. You know, many colleagues supported this resolution that was, all over the place about not supporting socialism, all forms of socialism. To me, that's Social Security, a number of things. Is this program a form of socialism, Mr. Martín?
I don't believe it is. I think what it is
so government subsidizing 93% of flood insurance.
Oh, the long-term,
multi-million-dollar homes. So for millionaires, it's not socialism.
Sorry for misunderstanding your question.
Yeah,
so
where the government is subsidizing and pretty much taking over. I mean, 93%. That's a lot.
So the risk pool and diversifying the risk pool is certainly one way that can make the program more.
Yeah, no, I'm just trying to make a point, because it seems like when it's benefits my residents, it's socialism, but when it benefits multi-billion-dollar homeowners, it's not. I yield.
Thank you. Now I would like to recognize myself, Monica De La Cruz from Texas. Prior to 2018, NFIP featured a non-compete in its contract with insurers that sells its products. Now, let me give you a little bit of background. I was in an insurance agency owner, and so I really understand the role that insurance agents play in relationship with their insureds. I can tell you from my experience that the best way to sell NFIP insurance, and I sold that for many years, is to make sure that the insurance agents are actually equipped with the tools to be able to sell the product and to be able to easily sell the product. In my experience in South Texas, we actually became we became licensed with our insurance company, and then we had to go and file independently with NFIP. The more steps you put in the way for an insurance agent, the less likely it is that they're going to do it. So even though I found myself in a low-income community, I felt like it was very important for me to not only offer the services of my insurance company, but also with NFIP due to the income of, or the lower income city that I was in. That being said, NFIP does feature this non-compete contract. Can you tell me more about this non-compete contract and why and how it actually affects the independent agent? If any of you all would like to take it.
You mentioned the independent agent, so I'll go ahead and speak, although I'm probably not qualified to answer your question completely. First, I'd like to thank you for your valuable insight. Couldn't agree with your statement more. As you were talking earlier about making it easy for the agent to access multiple products and provide more choice to a consumer, that exactly is one of the most critical points of this. So rather than have an agent access multiple different systems and prepare multiple different quotes to provide multiple different options to a consumer, it makes a lot more sense for them to be able to enter the client information in one place, one time, and then see multiple quotes as a result. And that, the removal of the non-compete for write your own companies is exactly what's enabled that type of solution. Thank you.
Thank you. Would anybody else like to discuss this portion?
I think Mr. Heidrich had it right. Point of access and ease of access is critical. So, to be able to go in and provide multiple quotes and comparisons is important for the overall growth of policyholder count, whether NFIP or private. And again, ample opportunity for growth for both.
Excellent. Thank you. I yield back. Will the gentlewoman from Georgia, Ms. Williams, is now recognized for 5 minutes.
Thank you to all of the witnesses that are here today to discuss this very critical conversation. It shouldn't be a surprise that the chronic underfunding of the National Flood Insurance Program's mapping and mitigation efforts has been particularly detrimental for communities of color, as it was for my district during Atlanta's catastrophic floods of 2009, when more than 20 inches of rain fell over 2 days in parts of the city like Vine City and English Avenue that are already experiencing disparities in wealth, causing $500 million of damage. Historic and ongoing socioeconomic and racial segregation has led to people of color being more likely to live in areas that are more susceptible to flooding, but aren't designated special flood hazard areas, and less likely to have the necessary insurance to protect themselves, their homes, and their belongings. And when people of color who do have flood insurance file claims, they are less likely to do so. They have a higher rate of unpaid claims. Further, renters are highly unlikely to know about the possibility of their rental home flooding. As climate change worsens, we can expect communities of color to be hit the hardest by its impacts, and the disparities people of color face only exacerbate the financial harm that they experience. And y'all, this is simply unacceptable. Dr. Martín, what legislative reforms to the NFIP should this committee focus on in order to address these disparities?
Thank you for noting the experience that has happened in your for your constituents. I think that experience speaks to the broader benefit of NFIP being integrated into the National Disaster Management Framework, so there's more opportunity to think about where mitigation works best, including very thoughtful mitigation and including buyout programs for low-income and disadvantaged communities. I do want to elaborate a bit on the disparities that you're noting by race and ethnicity and income. And certainly, I noted earlier that much of the pricing and coverage disparities have, the evidence suggests that we've eliminated much of that, a lot for a lot of reasons of automation, but there is still disparities in claims treatment and general treatment. And so this is a concern that we want to make sure that gets alleviated. So I would certainly, the recommendation that I had regarding data transparency, not just for NFIP, but also for private insurers so that we can monitor that kind of treatment disparity, I think is absolutely critical.
Thank you, Mr. Martín. Buying a home is the greatest way to produce generational wealth, which Black people have been locked out of for centuries, and it couldn't be more evident in my hometown of Atlanta, where we lead the nation in the racial wealth gap. However, if that house is in an area that is at risk of flooding, but isn't recognized as an SFHA, that wealth could vanish with one environmental disaster. Part of the problem here is that flood-related disclosure requirements are set at the state level. My home state of Georgia doesn't have any statutory or regulatory requirements for a seller to disclose a property's flood risk or past flood damages, greatly disadvantaging buyers who don't have this necessary information when purchasing a home. And for renters, there are no federal or state level laws requiring landlords to disclose any flood risk or damages. Dr. Martín, what can be done to remedy this issue that affects not only Georgia, but 20 other states?
That's exactly correct. The disclosure rules are determined by state policy, and state policies vary widely. In fact, after Hurricane Katrina in Louisiana imposed what's called the gold standard of property disclosures. But again, that only benefits home buyers and not renters. So the rental disclosure is very modest, to say at best, in this country. So one can consider national reporting disclosures, or at least provision of information that's accessible for renters of all incomes and in all backgrounds to be able to find out where the risks are that they may be going to rent.
Thank you. After the 2009 flood in Atlanta, the local paper, the Atlanta Journal-Constitution, published an article titled, "Damage Exceeds Flood Map Boundaries." If a flood were to impact Atlanta today, like it's raining outside and it continues to rain, we could expect the AJC to publish the same exact headlines because simply not enough has been done. Federal maps are still painfully out of date and can't accurately predict which homes and neighborhoods have a 1% or greater chance of experiencing flooding in any given year. This means that homeowners don't know if flood insurance is something they need to even consider buying. Dr. Martín, you might have to send me this answer in writing, but beyond increasing funding for the NFIP to continually update floodplain maps, what can Congress do to begin to alleviate this issue?
Certainly also thinking about the mitigation strategies. Climate change is affecting every community. We're in a dynamic time, and so it's important to make sure that we provide those resources to account for those future risks.
Thank you, and I have more questions that I would like to submit to the witnesses to get a follow-up on, and I yield back, Mr. Chairman.
The gentlelady yields. The gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, the witnesses, for being here. I represent parts of Long Island that got ravaged during Superstorm Sandy. But I'm not going to, I have my own suspicions about risk rating 2.0, but I'm going to save that for another day. But I do want to ask Mr. Heidrich, it's been about a year since risk rating 2.0 did go into full effect. How have monthly premiums changed since then, and how has your experience been as the new pricing methodology has been rolled out? Methodology.
Thank you for your question, Congressman. The difference in premium has impacted every property differently because the whole premise of risk rating 2.0 was to incorporate risk characteristics that are specific to each individual property in the rating factor. So I have seen some people premium decreases, some with premium increases, and a lot of that change is dependent upon the starting point. Where was the premium before, and was the premium adequate before? So for instance, in the prior rating system, before risk rating 2.0, properties that are in low-risk areas, what was formerly referred to as the preferred risk policy, preferred risk areas, were actually the worst performing segment of the NFIP, the least profitable segment of the NFIP. So as you'd expect from that starting point, those least risky properties have actually probably seen on whole the largest increases in premium.
So after Sandy, the federal government came in and a lot of money was spent either raising homes either on the Barrier Island, Fire Island, or on the South Shore, or also installing flood openings. Would you say that with now risk rating, are there clear benefits now with those mitigation features that people have added? Are there benefits to their new policies?
There are benefits to mitigation. The challenge that agents have had under Risk Rating 2.0 is the black box rating engine, if you will, that makes it impossible for insurance agents, floodplain officials, and others to really provide specific guidance to a consumer that wants to implement mitigation, but also wants to know what their return on investment via a lower premium is going to be.
So have you seen, just because of where their property is located, if a home has been raised, have your consumers seen increases still in flood insurance through the NFIP?
Some of my consumers have seen increases as a result of Risk Rating 2.0, and those people that had existing policies are protected by the glide path, the federal statute that caps increases at 18% for most policies.
But have they? My question is, have they seen a benefit if they've done those mitigation features like raising the home? Have they seen a benefit from that?
I don't have any clients that have actually raised a home, but what I have been told by the NFIP is that the extent of the mitigation impact interplays with a lot of other rating factors. So there may be one property that sees a much smaller impact or a much greater impact as a result of their mitigation efforts than another.
Thank you. I appreciate that answer. And now I have a question for Mr. Enoizi. I recently saw an article about a community-based catastrophe insurance transaction spearheaded in New York City, pilot program to support low and moderate income communities in high flood risk neighborhoods. It appears that the city worked with Marsh to essentially finance emergency grants to households in need of assistance in the aftermath of a flood. Can you tell us a little bit more about this program and whether the program that was set up in New York City could be replicated in other parts of the state or even nationwide?
Thank you for the question, Congressman. I think the community-based catastrophe program actually responds to many of the questions that have been raised today, particularly around low-income homes. What it effectively does is it allows a community to purchase insurance as opposed to looking to buy them individually. And the advantage of that is, first of all, parametric trigger, which is essentially there's no argument over whether or not the flood occurred or didn't occur and what level it occurred, and that allows for quick payments, $15,000 payments. Some of that money can then be put towards risk mitigation that you alluded to. The New York state that bought, or New York community that bought the policy got a premium reduction because they were buying en masse. That allowed them to then invest some of the saving that they made into further risk mitigation. And in short, I think that is the way that you're going to achieve greater take-up of insurance in the United States, by buying on a community level instead, as the Congresswoman was alluding to earlier, people who cannot afford to buy insurance.
I appreciate that. I did have other questions, but I'm out of time, so I yield back.
The gentleman yields. The gentleman from Nevada, Mr. Horsford, is now recognized for 5 minutes.
Thank you, Mr. Chairman, and to the ranking member. This is a critically important topic for us to discuss. And while at the moment Nevada is amidst the grip of a historic drought, the varied ecosystems across my state are such that many of the communities that I represent are extremely susceptible to flash floods. As Dr. Martín rightfully pointed out in his testimony, the most pressing issue and biggest barrier that I hear from my constituents is affordability. We need to be expanding flood insurance to everyone who needs it. The loss associated with water damage can be absolutely catastrophic, especially for a family that was already struggling to make ends meet. Without insurance, these costs can lead to financial ruin, and with upwards of 57% of damages uncovered, our nation has issues with both the uninsured and a massive underinsured population. Now, I understand that private flood insurance can be an excellent supplement to coverage for high-value residential properties. But today, I want to focus on individuals who cannot afford even a basic policy. It is an incredible paradox that we find ourselves in. Individuals who are most in need of comprehensive flood insurance coverage are far too often unable to afford their premiums. So I'm eager to work with all of my colleagues on this subcommittee to find responsible improvements to our nation's flood insurance program, but I want to make sure that lowering cost and expanding coverage is at the center of anything that we do. Dr. Martín, could you please take just a few minutes to discuss the consequences for working families if the National Flood Insurance Program rates would need to quadruple, as you mentioned in your testimony?
Certainly, and I'd like to even expand your question and talk about the consequences for NFIP and the federal government from not helping low-income households be able to afford insurance. So for the households themselves, the evidence shows that a disaster event, including most floods, would create a spiral, a financial spiral, leading up to at least 4 years. And I say 4 years only because the data that I have access to was for 4 years after. So it's very likely that that financial spiral continues well after. So for households, it's absolutely critical to have some preparatory assistance, to have some financial assistance to be ready for the flood. And that's the whole purpose of insurance. For NFIP, certainly you're looking at the broader federal coffers. The investment in insurance and mitigation saves money. Studies have suggested from the National Institute of Building Science that for every dollar invested in mitigation, you have $6 in savings from recovery. So it's a better investment from a fiduciary standpoint as well.
Great. Well, I agree that it would be simply unacceptable to allow that many of our constituents to have to fend for themselves because they can't afford comprehensive flood protection. And I want to work together to keep flood insurance affordable to those who need it the most. Let me conclude, Dr. Martín, by asking you to speak about how means-tested affordability programs may have spillover effects into the private market and result in increased affordability for all policyholders.
It certainly would. If you're providing resources to a certain number of the population that could be accessing private insurance, NFIP, et cetera, you're actually making sure that a broader pool of people will be purchasing products, assuming that they have some contribution in because they're clearly paying for the product as well as having it partially subsidized. You're going to be expanding the pool for a much broader group.
Thank you very much. I look forward to working with my colleagues on this, and I'll yield back my time.
The gentleman yields. The gentleman from South Carolina, Mr. Norman, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Enoizi, renters are a group that typically has low take-up rates for flood insurance. As noted in your testimony, a contents-only policy is an option for many renters. Can you speak to the benefits of contents-only and how that affects those who choose to get the policies?
Thank you, Congressman. I guess it really goes to creating a culture of people who look after themselves, acknowledging the remarks about people who are affording to be able to look after themselves. But essentially, often those people would not be aware that the property, the underlying property, was not covered for flood insurance. And so providing a way to provide a policy to renters, perhaps through mandatory offer, not mandatory purchase, but mandatory offer, might overcome that problem.
It just specifies it really is a tailor-made policy that people could choose from. Is that right?
Yes, Congressman. It's about providing options and innovation in products so that people can actually choose what their own risk appetite is and then purchasing insurance to cover the delta.
I guess this is for anyone, but compared to other insurance products offered in a state-regulated marketplace, how much consumer choice does a homeowner have when purchasing a NFIP coverage?
I'm happy to start, Congressman. There certainly are fewer flood insurance options than many other personal lines insurance products. As stated earlier, over 90% of the current flood insurance is with the National Flood Insurance Program. We've seen several new private flood insurance companies come into the market. I think it's important to recognize that the private flood insurance market is still in a stage of infancy. It has come a long way since 2014, but it's really since 2014 that private flood insurance companies have offered personal lines insurance products. So we're still kind of new to this, and I think that private companies working side by side with National Flood Insurance Program will help that industry to continue to grow and become more stable.
Yeah, and the lending institutions are getting a lot more, I guess, insistent that flood insurance is obtained, even if the land that they're building on is not particularly prone to a flood.
It's my experience as an insurance agent that the lending institutions are very, very diligent at enforcing the mandatory purchase requirements. They not only are diligent in following up, making sure they have proof of flood insurance, sometimes weeks before a closing occurs, but then even as that policy is enforced and renews year after year, reading the declarations page and asking for certain language to be altered or to make sure that it's going to be 100% compliant with whatever regulatory agency that's going to come in and audit them on an annual basis. It's my experience the lending institutions are actually quite fearful of the regulatory audits regarding flood insurance.
Yeah, and I'm in the commercial real estate field, and that's one of the first things we start with. You examine the flood maps. You do look at the declarations. You do get the premiums, if you can get it, before you purchase a property to put the improvements on. Well, I want to thank each of you for testifying today. This is very important. It's very important for us to have a bill which is coming forward with competition, letting people choose the different policies that they may want to look at. So thank you for what you're doing, and Mr. Chairman, I yield back.
Gentleman yields. The gentlewoman from Colorado, Ms. Pedersen, is now recognized for 5 minutes.
Thank you, Chairman Davidson, for holding today's important hearing, and I also want to thank the witnesses for offering your expertise today. The National Flood Insurance Program provides a critical backstop, as all of you have talked about, to ensure that property owners can be offered flood insurance. In Colorado, we're routinely seeing flooding from heavy storms and early snowmelts. However, as you know, 25% of all flood insurance claims come from outside of known high-risk areas, meaning that many communities that have never experienced flood risk before having one. And even worse, the constant and growing risk of catastrophic wildfires leads communities that have previously not been prone to flooding to experience repeated flood events for a number of years until vegetation regrows and other mitigation efforts are put in place. These homeowners are often surprised that their homeowner policies do not cover flood events, and I unfortunately have been one of those, where we unexpectedly faced a flood, and I was told to me the only water that occurs inside the home is covered, which is devastating for far too many people. There are also communities throughout Colorado that have been spared the worst of a wildfire and end up needing to surround their homes with sandbags because even minor rain events can lead to heavy flooding. And as this committee considers the long-term reauthorization of the National Flood Insurance Program, we must also work to ensure that consumers are aware of their options, and I appreciate the discussion about what options we have to do that moving forward today. One of the most pressing issues that this committee must also fix is that many homeowners wrongfully assume that flood insurance protections are covered, and disclosure requirements and education surrounding the availability of flood insurance will help them better understand what options that they have. A very important issue for Colorado is that we need to focus on here, that I'm especially interested in, is not just around flood insurance, but what we're going to do to address wildfire insurance and coverage. I have heard from so many constituents in Jefferson County that were almost impacted by the Marshall Fire, who are unable to actually insure their homes because of the risk that is posed due to wildfires. What are we going to do? What options do we have to work together to address that issue and bringing maybe some of the similar approaches that we have with flood insurance? And I don't know who'd like to touch on that. Maybe Dr. Martín?
To start, thank you for that question. And certainly, for me, this speaks to the broader issues of all hazards that affect people, because people they don't silo their houses as being flood-related, fire-related, et cetera. People think of their houses in all of its performance capacities, which means that they may not understand what their various insurance policies cover. So the idea of having documents, some sort of checklists for consumers to easily understand across all of their policies is absolutely critical. That tends to be regulated by state. So, and I'd like to expand from Colorado to California that went through many of the same conditions in the last 5 years, leading to a lot of homeowners insurance policy providers leaving the state or threatening to leave the state, right? Because they couldn't afford, they couldn't, it was a catastrophe, of course, that they couldn't cover anymore. So we see this sort of repeating pattern of being able to provide private insurance, but then people not being able to afford it when it's available, and most consumers not understanding what their policies cover. So I would say when it comes to documentation and availability of information, thinking through akin to what we've done in healthcare insurance provision and making sure consumers understand what is in their policies is in their best interest and certainly in the best interest of state and national government.
Specifically, if I may, Congresswoman, I think the other thing I would add to Dr. Martin's comments is the need for risk mitigation, as we've already heard, as regards flood, but also with regards wildfire, and specifically with regards wildfire, there are nature-based solutions that can be put in place that can help create fire breaks to prevent these losses.
And I'm still getting used to being in Congress versus the state legislature, so I was raising my hand over here. But something that we did in Colorado is we brought a fee for every policy plan that actually went towards fire mitigation. And I know, generally speaking, insurance companies are not in favor of fees, but just as an example of something we might be able to come together on to actually put money and investments up front to save in the long term. But really appreciate the conversation and what we're going to do to make sure that constituents like mine are able to have access to the insurance that they need. With that, I yield back.
Gentlelady yields. The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Mr. Chairman. In 2019, there was a bomb cyclone that hit the state of Nebraska. It was a major flood event in Nebraska that led to a disaster declaration and serious damage to 104 cities in our state. In fact, we're still feeling the effects of the flooding this day. Offutt Air Force Base was severely damaged, and we are still working to restore a lot of the facilities that were destroyed. Nebraska is not a coastal state, but we have more miles of river than any other state in the nation, and our flooding is a cautionary tale. It highlights the need for protection against flood events across the country. So we have to ask ourselves, how can we ensure that homeowners are better protected the next time there's a major flooding event? And I do think having private options is a good direction to go. I have a question for Mr. Enoizi. Some other nations have adopted flood insurance marketplaces that provide robust protection with a private model, and you've testified to this already. Can you speak to some of the very specific market-based reforms that were implemented in the United Kingdom?
Thank you for the question, Congressman. And I should point out, somebody who ran one of these public-private partnerships for nearly a decade, I'm very much in favor of public-private partnership where the risk sharing between the public and the private is maximized. In other words, you find incentives for the private market to take as much of the risk as it's possible to do, and I think that's much of what we've been talking about today. In the United Kingdom, we have something called Flood Re, which is a public-private partnership between the UK government and the insurance industry, and that has a number of features which we've, again, been touching on here today, principally around making affordable insurance to those people who cannot afford it, but who are by necessity living in flood zones as opposed to choosing to live in flood zones. Secondly, when flood occurs, they have to build back better. In other words, part of the contingency of them receiving a payment on the claim is that they then have to put flood mitigation in place, putting their plug points halfway up the wall or not putting carpet on the ground floor. And thirdly, after 3 strikes, if they don't put those mitigations in place, then they are no longer offered the insurance. So those are the kinds of things you see in the United Kingdom.
And how effective has that been, the Flood Re program?
I think largely it's been extremely effective. It has a sunset clause. It was due to expire after 25 years. And as with my own experience, one of the things we were able to do and what they are able to do is to push most of the risk back into the private market so that only the uninsurable is left with the state. which is probably the way it should be.
Mr. Luchtenmeyer talked about it before, that we have a situation in the United States where homeowners can get their home rebuilt every couple of years. This is exactly what you're trying to prevent by requiring the insured to build back better after a flooding event. I don't know how familiar you are with our federal program, and I'm brand new to Congress as well. What has that conversation been like among the flood insurance community about requiring people to build more flood-resistant structures following a massive claim? Can you speak to that, or would there be somebody else here that could speak to that?
I think it's generally been extremely well received because if they don't do it, then they will no longer be eligible for the insurance. And so it's really almost, they're put in a position where they have to do it.
Well, thank you very much. To close, I'd like to emphasize the importance of nurturing a private flood market that is competitive, innovative, and will drive costs down. The National Flood Insurance Program provides a one-size-fits-all solution on flood. And given my last name, everybody should have flood insurance. It works for some, but a robust marketplace would introduce more consumer choice, allow for more customization, and eventually lead to price competition that benefits the consumer. Thank you, sir, for your answers. Thank you, Mr. Chairman. I yield back.
Gentleman yields. The gentlewoman from Massachusetts, Ms. Presley, is now recognized for 5 minutes.
Thank you so much, Mr. Chair, and thank you to our witnesses for joining us today on what is truly an urgent and consequential issue. I represent the Massachusetts 7th Congressional District. This is a district which includes several coastal communities vulnerable to flooding. So encouraging greater flood insurance is an issue of significant importance to me and my constituents. For cities in my district like Boston, Chelsea, Everett, the climate crisis is not an abstract, far in the future, distant problem. It is a reality here and now. Communities, families, small businesses are experiencing firsthand the extreme impact of weather events that are growing in severity and frequency. The combination of hurricanes, storm surges, and rising sea levels resulting in greater flooding, plain and simple. The National Flood Insurance Program is essential in safeguarding our most vulnerable frontline communities and helping homeowners protect both themselves and their properties. However, this program is also facing several unique challenges. Mr. Enoizi, I was going over your written testimony and you highlight in it the challenge of the flood protection gap. Just for the record and for the general public, could you expound upon what this is and why this gap exists?
Thank you very much for the question, Congresswoman. The flood protection gap is essentially the difference between economic loss and the insured payout. So if the loss is 100 and the insurance policies pay out 20, then you have a gap of 80, and that's obviously a massive drag on the economy. And globally, there are something like $82 billion of flood losses every year. And the protection gap on those is somewhere around 25 billion. So it's an enormous problem globally, not just in the United States.
Thank you. So it's critical that we ensure flood insurance is available and affordable, as we've heard throughout this, to those who need it, especially for those living in high-risk flood zones. Dr. Martín, actually first, Mr. Heidrich, what do you see as the primary barriers to increasing flood insurance coverage, and what can Congress do to address them? What role can we play?
Well, thank you for the question, Congresswoman. As I stated earlier, I think the barrier really comes down to two primary issues. And before we think of innovative and outside-the-box issues, I really think that we need to address these two fundamental issues, which is, number one, education, not just consumer education, but all those people, those trusted people that would advise a consumer, family, friends, other professionals. And second, affordability. Some sort of an affordability solution that is outside the National Flood Insurance Program, means tested for those people that need that support. Sorry, I lost the second part of your question.
Oh, that was it. Just what did you see as the primary barriers, and what can Congress do?
What Congress can do. Thank you very much. First, don't let the National Flood Insurance Program lapse. Second, any long-term reauthorization that modernizes the NFIP would be welcomed by, I think, everybody who is impacted by flood insurance, and I can't imagine who's not. When we talk about those reforms, I mean, I know that sometimes sticky and sometimes complicated, but we don't have to have every single reform, every single idea. I would encourage the committee to not let perfect get in the way of good if we can make sure that this product continues to be available and maybe even modest improvements for those many Americans that need it.
Thank you, Mr. Heidrich. Certainly a universal issue, urban, rural, and suburban. Dr. Martín, as a housing expert, can you speak to the economic benefits of increasing flood insurance coverage for homeowners and small businesses in terms of reducing those financial losses?
Absolutely. I mean, one of the critical areas in which people often forget when they're purchasing a home, for example, is all of the additional expenses that are associated with maintaining and making sure that the home is going to be safe in the long term. So certainly, opportunities, particularly for low-income households, to make sure that they have those opportunities will ensure a more stable housing product that can be insured, that can be mortgaged and lended to, and that could be rented out as needed. So it's absolutely critical to ensure that we get this right. To speak to an earlier point that you made, Congresswoman, is the fact that these risks are going to increase. We're going to see continuously changing dynamics because of the changing climate, and so it's absolutely important that we get this right now.
Thank you. Well, again, expanding flood insurance coverage is an important tool to prevent everyone, especially low-income folks, from facing financial ruin in the event of a flood. That's my time. Thank you. I yield back.
The gentlelady yields. The gentleman from New York, Mr. Lawler, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thanks to our witnesses for sharing your insight and experiences on this important topic. This is a topic that is of great importance to my constituents in the immediate suburbs of New York City, who have seen over the last decade plus increasing flooding and the after effects of storms like Sandy and Ida. As a nation, but especially in New York and in my district, we are also dealing with serious affordability issues today. So finding ways to ensure that we are encouraging Americans to have flood insurance and to help them avoid being in a situation where when you have a flood, you aren't covered is extremely important. Currently, only homeowners with active federally backed mortgages in higher risk special flood hazard areas are subject to the law's mandatory flood insurance purchase requirement. That means that renters and homeowners without such mortgages may be at the same elevated risk but have no requirement to insure their residence. Or they might be overlooked by the NFIP's outreach and remain unaware of their elevated flood risk. Mr. Heidrich, would encouraging more private flood insurers to seek out such homeowners in special flood hazard areas and offer them customized private flood coverage help reduce the flood insurance gap?
Thank you, Congressman. I would say that anything that improves choice and access for consumers will help to reduce the help to reduce the flood insurance gap. Private flood insurers have, over the last several years, done a good job of filling gaps and providing alternatives to clients that may be a lower priced product or even expanded coverage than the NFIP offers. And the more that the private flood insurance industry develops, the more choice there'll be for consumers, and the closer we'll get to that goal of closing the gap.
Thank you. Beyond individual homeowners purchasing individual policies from the NFIP or another provider, what other insurance options exist to help insure homeowners and communities against flood risk? This is for any of you on the panel.
Well, Congressman, if I may, just on your previous question, just by way of an anecdote, in Germany, in such areas that you were referring to, you would have a billboard the size of that TV screen saying, if this river floods, you need to have insurance, otherwise the government will not bail you out. I just make that point as an anecdote. To your specific question, in your state, we have actually been successful in working with some of your communities to actually sell a product that actually covers the community and thereby overcome the need for the sort of education, which can be very difficult, and also the affordability issue, because it's actually the community that's purchasing the insurance on behalf of the vulnerable community which ensures a very speedy payout, quick recovery, less economic drag, reduced impact on the taxpayer. So that's one of the innovative solutions that we're working on with people in your state.
Just to follow up on your initial point about Germany. So what have you seen in terms of other countries in Europe or Asia and their approach to closing flood insurance gaps? And can any of those tools be utilized here to help us meet our own domestic challenges?
Again, thank you for the question. I guess it really, you see two different approaches: mutualization of risk, and you referred to Asia, so there's the Southeast Asian community of nations that have essentially clubbed together to provide this kind of insurance on a territory-wide basis, and that includes sometimes actually even predicting through satellite imagery when the flood is going to occur, payout before the event actually happens, and then the ability to move out of the way of harm, close up your businesses, and protect yourself that way. Other areas use socialization of risk, where you're actually using a levy on taxpayers, homeowners who purchase the product, where everybody, as in the UK, pays £10. I live on top of a hill, but I pay my £10, and that allows people who are in a vulnerable area to purchase more affordable insurance. Those are cultural, political issues, which I won't comment on, but there are lots of different solutions to the same problem.
Thank you. I yield back.
The gentleman yields. The chair now recognizes Ms. Garcia for 1 minute.
Mr. Chair, I would like to ask unanimous consent to enter for the record two documents that I failed to do during my questions. The first one is flooding, and is nearly a daily occurrence throughout the U.S. It's a Forbes magazine article. And the second is a Houston Chronicle article titled, "Houston Area Property Owners Drop FEMA Flood Insurance After Pricing Change." Thank you, Mr. Chairman. I ask for unanimous consent.
Without objection, so ordered. I'd like to thank our witnesses for their testimony today. I think we can safely say that we have good ideas to make a better product, and hopefully we can work together to do just that. Without turning this into a think tank, we can hopefully at least make it somewhat better. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their responses. I ask our witnesses to please respond as promptly as you are able if you receive such questions. This hearing is now adjourned.